Hey everybody, welcome back. Well, as we went over yesterday, we have no leadership, and we're going to talk about that. And just to reiterate before we even begin, 12, 22, 55, a lot to cover, and we broke today. Now, what we have is what I would refer to as the second leg down. Now, I know these are small moves, and you're like, what do you mean second leg? Well, yesterday it was lithography, and that's what happened with ASML. And the ASML trade is cleaning up my 1,000 lines. We saw that break, right? We have a ton to go through with positioning in the market, what happened with Netflix. There's a lot to go over, but I really want to hammer this home before we start getting into the McClellan Oscillator and what's going on over there, and what just was in the Wall Street Journal was exactly what we talked about 2 days ago. So we have a lot to cover, so I'm going to go fast. And if there's parts of this, just watch it again. Now, also, I'm not going to have time to edit this because I'm in the middle of a couple trades, and then I have a conference call later this evening. So let's just get to it. ASML. See the break? Lithography knocks us down. You make the other lower low. Got it? Good. All right. Why the follow through? Taiwan Semi. The problem with Taiwan Semi was this. People are going to look at the quarter, and this is where it is. This is why it's so important for you to start with that stool from the standpoint of understanding fundamental analysis. You understand already, if you've been watching these videos, why macro is so important. Fundamental analysis and understanding what you're supposed to see when these come out with earnings can make you or break you. A great example, I'm going to walk you through a trade tonight that we did in the community where we did a Netflix trade. And we were so far ahead of it, and I'll show you why and how we were able to do that. But when you have the stool here, we're going old school and drawing it, and you have the macro leg, which you know why 1 o'clock the market did what it did today, right? You know because the inflationary tip bonds came out. You know that's why the dollar went higher. You know because the dollar went higher that you know that equities were going to sell down, right? You can connect all this now because you've been watching these. And for those that are new, welcome. Now, again, the fundamental term here, why is this important? Because everyone is looking at this and going, oh, it's a good quarter, it should go up. But if you did your due diligence, you know that CapEx was supposed to come in at 32 to 34 billion. CapEx is them building out capacity utilization, right? So they need to increase the capacity to make more money to sell more chips, which means certain companies sell products to Taiwan Semi. We're going to go through those names in a second. Stay with me. If you knew this, you know why it was going to gap down, and you were able to short it early this morning when you saw that, if you had access either overnight or pre-market to shorting this name. It was very, very clear, very easy to pick off what the issue was. And that's exactly what came out. And so when everybody else is standing around and looking at Netflix and going, well, why did that bounce? And then why did KLAC sell down and come at lows? Why is Lamb at lows, right? When you connect all these dots, this makes your life so much easier. And that's exactly what you want to do. Right? That's exactly what you want to do. You want to be the person that's connecting all the dots. The person that's looking at this and saying, well, it broke the 55 and it's below it. Yeah, of course, that person, and I do that all the time, we can still make money off that trade. But it's the person that's connecting all the dots that's actually getting in ahead of that and able to get in today. Same with Lamb Research, which I'm currently short. And it looks very clear to me that these names are going to get worse, not better. There are some indicators already that are showing that maybe we're going to see, keyword maybe, we're going to see some kind of basing, but I'm not sure on that. So when we get into the stocks and we understand now why we're looking at that, we understand the break, we understand the second leg down, you have to ask yourself, with no leadership in semiconductors right now, because what is leading? What's really left to move us? So we go through the AMDs of the world, right? We start looking at earnings, which start coming out next week. And let's move that over here. Let's move this over. And maybe they'll let me actually do what I want to do. There it is, April 30th, Tuesday. So as we start approaching these names, because we know that NVIDIA is not for some time, it's not till May, as we're all the way out here, May 22nd. So as we know this, we have to start asking, okay, well, we're going to have more earnings next week. What's going to drive the market? Well, we already went through our sectors yesterday with the SOX breaking down. We lost the XLF. That's below the 55. This is just a FAZ. I'll clean all that off. And so we don't really have any leadership, right? You're supposed to go into energy. They're not really doing that. Okay, so maybe basic materials. They're not really doing that. They're barely hanging on by their fingernails. How about tech? Well, that's just absolute toast. I mean, this is extra crispy at this point. Down 1, 2, 3, 3-bar patterns, and now you're cracking sitting on a support line, right? I mean, don't do whatever you want. But I mean, this is pretty obvious that this thing has problems. I was going to make a joke, and then I just made myself laugh at the joke, and it doesn't matter. Anyway, you see what's happening right here and see how that's cracking? So now it becomes a question of, well, what's going to lead? Here's the problem. Nothing is leading. XLP is hanging on by its fingernails. Right? XLV, which is Staples, which is supposed to lead. XLV closed at the low of the day. Right? If you go out there and you try and buy UNH, good luck. right? As it rallies up, what's it do? It drops. So my point of pointing all this out is we're not rotating. They're rotating out of equities, period. And they're going into bonds. And we talked about this with the risk-free rate and also what was going on with the treasury market. In front of your slides, these slides are from CME FedWatch tool. And if you type that into Google, you can actually pull this up for yourself. And we're just going to do this pretty quickly so you understand what the issue is before we go to the next issue. So May 1st, right here, you see the meeting date? This is for the Fed meeting. This is the contract expires May 31st. It tells you the price of the contract, etc. Anyway, no change, hike. See the change right here? Okay. There is zero chance of a cut in May. How many chances? Zero. Zero. I know that's not a zero, but I'm not going to give you a circle. All right, there's your circle. Zero. Now, what does this mean? This is a major shift. No matter how you look at it, it's a major shift, right? All right, so 1 month ago, there was very little chance that you were going to actually cut rates, right? I mean, you were at like a 7.8% chance a month ago that you were going to cut rates in May. Now you're at a zero. Okay, a week ago you're at 2, a day ago you were at 5, you're now at 0. There is zero chance of you cutting rates, all right? This is the target rate for those that are newer and haven't seen this before. Now, let's take a look at June. Now, if we look at June, and here's the date up here, again, CME Fed tool, expires, tells you when the contract expires. These are actual contracts. There's an 18% chance you're going to ease. There's an 80% chance, 79.7, right? And then there's a 1.4% chance of a hike. So you go here to the hike. Well, yesterday there was no chance of a hike on the 17th, 0, 0. So I picked this up today. I do a ton of research, and people that have been watching these videos know this. There was nothing really out there until about a week ago that there was a chance of a hike out there at all in any research that I was reading. It was probably in everyone's research today. There was a line on it. Goldman, JP Morgan, Morgan Stanley, all this research, they had like little blips like, oh, you know, there's only like a 7% chance or 8%, like they were all coming out, but it's being floated out there now. That flotation combined with the risk-free rate that we went over yesterday, and I'll just give you some examples of that quickly for those that didn't watch yesterday's video. But if you find this helpful and you're trying to figure out what the heck the market's doing, I'm explaining what the market's doing, right? I'm not telling you what the market's going to do. I'm explaining what it's doing. There is a huge difference to that. But you have hikes. All right. So now that you have hikes and we understand where we are in May and you have no chance of a cut, but maybe they hike. All right. Now that we understand that, let's go and take a look at the SPY again. All right, so we now know that the SPY was factoring in how many cuts? 7 back here. December, it was 3. By the time we had January Fed meeting, it was 7. This is where they stopped cutting rates. We're up 20% from the high from the November move. We already know that, right? Earnings yield, meaning if you own the S&P, what do you own? What do you get from an earnings yield? Not dividend yield, earnings yield. You get 4%. I'm not going to walk through that again. We did it yesterday. And for those that are newer, you might want to watch yesterday's video. I'll link it at the end. And the one before that gets even the more detail on it. Now, here you are, and you can see where you are. Do I want to go out there and buy the 10-year at 460, or do I want the risk of equities at 4%? Do you see the problem? Now, in yesterday's video or the day before, I walked through that where you have to focus on is the pension funds. It's not retail that's going to do this. It's the pension funds. And look at what they're coming out with today. I've got to get rid of the circle. We're going to have to go back to the square. Pension funds are pulling hundreds of billions from stocks. They're coming out with it today. And now if you just watch these videos, you would have been ahead of this by 2 days. So where am I going with this? This is not going to stop. See, pension funds, when they invest, they go on assumptions. So all they want to do is make sure, and rightfully so, that the firemen or police or CalPERS, the educators, whomever it is, they want to make sure that there is enough money to pay, right? That's all they care about. Is there enough money? They're not out there trying to kill it. They're not YOLOing, Netflix. They're trying to make sure that they earn the percentage that they've assumed that they're going to make. They go on assumptions. So if you're going to be able to look at the assumptions and realize that you're going to get more at a risk-free rate than you're going to get off the earnings yield, which is very different than where you were in November and into January, then what they are going to do is they are going to buy bonds and they are going to sell equities. Okay, this is what's going to happen. And that's a macro event, period. And you have to understand that this is what's going on. So as people are sitting here waiting for this miraculous bounce to come back so they can get, quote, out of their positions and, quote, break even, right? It's not going to happen. Pardon the voice. It's not going to happen. And quite frankly, doing that stuff and waiting for the quote break even is the kiss of death. Now, I don't want to be the bearer of bad news, but I think I've been pretty vocal about, no one really knows what's going to happen. I was pretty bullish on ASML. I was pretty bullish on Taiwan Semi. They're not doing what they should be doing. They just aren't. And I'm not really sure. It could be regulatory issues with China. ASML alluded to that a little bit, the filings. But you lost Microsoft yesterday. You got confirm of losing Microsoft today. Amazon was setting up to break out a new high and turned into a perfect short today, breaking the 22. So we're seeing them adding names. We're adding names that are cracking. Right? Apple. So again, we're adding sectors that are cracking and people are waiting for this bounce. Now, if we look at the Qs, there's nothing here that's telling us anything that we're near a bounce, right? If we put it in the Bollinger Bands on the Qs, okay, and you see that you're at the third standard deviation here, and for those that are new to this, again, right? First standard deviation, there, second standard deviation, right? There's a 67% chance that you're going to be in these, right? And then when you start to bounce out, there's a 95% chance you'll be in that range. And then this is a 99.7% chance you'll be in the range. You'll probably stay in the range, but when you get down here, you have to expect some kind of bounce eventually. That is not our, oh boy, we better get back in. That is, hey, we have an issue. You can see it here in November, right here, where you were able to, see it pretty clearly right into that Fed meeting, right? All right, so when we see this, we can go, okay, well, yeah, this is getting a little goofy in here, isn't it? Maybe we're going to find a position here where, let me clean these off. Maybe we're going to find a position where we're, this is going to slow down. And you hit the third standard deviation here, backed off. Doesn't mean you're not going to go down. It just means that you're setting up for some kind of bounce, right? That's all it means. Let's take a look at the SPY. That's all it means here. Right? It doesn't mean that you're going to stop dropping, but it does mean that you have come really far, really fast. They're also opening up, which means also that this is going to get even wilder. Right? When this expands, it means get ready for increased volatility. So there could be a snapback here. And we just need to be cognizant of, does this mean that things are back to normal? No, we're being driven by a macro event, right? An unwinding of billions of dollars of pension funds into bonds, right? We know that. We just went through it. And so what we have to do is go, okay, well, what can we utilize to determine if we're going to see a bounce? Stay with me, and then we're going to go through some names. The first thing we have to realize is, where are we? Okay. NASDAQ is undergoing one of the worst 4-day sell-offs of the past year. If you take a look at where you are, the only time worse was when? And that was in February. Put in the room today, and it actually made me laugh, so I thought I'd share it. When you dip, you can keep on dipping. It's very possible for that to continue, and you need to understand that. So what we're trying to do is look for reasons that the dip might stop and actually be worth buying. I'm going to give you a couple things to watch. One of the things I find most helpful, I can use RSI, I can use stochastics, things like that. I use RSI a lot, especially for just like thematic reasons, but I do find it helpful. For me, when I look at what's going on with the SPY, I use a histogram, the MACD histogram. I don't care about MACD, I care about the histogram. And I'll explain why. What I'm looking for from this is a change in trend. I'm not looking at the rate of change for this. If I'm trying to figure out and go, okay, when can we bottom, for example? I can show you exactly how I use this, and then you can use it exactly how I use it. So see these color changes? Okay, they'll show you peaks and valleys. It doesn't mean you're going to go up. It does mean that the majority of what you're seeing is probably coming to an end. So the very first thing that we always do is we go back and see how far we really have to go to see something at this level on where we currently are. And so what we would do is drop the line on the histogram. It's the very first thing we would do, and we're going to just throw this out the window, right? And then we don't want to use anything from here over. So then we would go, okay, well, this is a clear sign that we are overdone. This is a clear sign 2, 3, 4. Now, some of these have given you very short-term bounces and then rolled back down and bounced again. Some of these have bounced and held and gone up for a month. So I'm not looking for duration. I'm looking to see if it's setting us up to put us in a position where we could bounce. That's all I'm doing with it, right? I'm not saying that this is going to be a huge bounce. I'm not declaring the magnitude of the bounce. What you want to watch here, look, see the color change right here when it flips colors? That's telling you that we're getting done. So if you're in here at that time and then it flips to green and then it peaks again and then you can see a change. That's how I use the histogram. It's not a be all end all. Here's November. See the histogram when it kicked in and what happened? We still kept going higher. even though it kept selling down, right? So what you're looking for is the change. It gave you a change. And if you stuck with the change, you did just fine. But it's not a be all end all, but you're looking for little inflection points out of it. So when it happens here, what I'm looking for is I'm looking for the first higher low, just like I had here, and then the color will change. And then you'll note that from there, you're pretty much bottomed, right? And you're pretty much bottomed here at the same time. And then here as well, you're pretty much bottomed. That's what I'm using it for. I'm not using it to tell me that I'm not going to make another new low. Just that I'm a little sleepy right now and the sellers might be a little exhausted. And I'm not seeing that yet. Now, let me give you one more that you can use. Trading View, which is what I use, doesn't really have the best at this. This is the NASDAQ. This is the McClellan Oscillator. And what you're going to see is the McClellan tends to actually give a signal. In my opinion, you'll see that this looks very similar to MACD. And if you look at how MACD is calculated and how McClellan is calculated, the oscillator, it's pretty similar in some regards. Now, I will look at it for this purpose. I don't use this all the time. I'd rather use summation, but summation is going to be too slow for what I'm trying to do. Now, the McClellan summation index. So where I'm going is this. See down here? See how you're at minus 200, which is pretty much insane. And then when you hit that 200, see how you made the higher low right here? All right. So when you start to see this kind of stuff, where you start to bottom out, right? Even here, see where you're starting to make these? It's putting in that bottom. It's the turn that you're interested in. Again, I'm not interested from the upside. I'm interested in saying, this is how I use it. You can use this however you want. You can use this to determine tops. I don't find it useful for that. I'm sorry, I just don't. I find it useful to determine tops for me in using the summation. I'm not going to do that right now. And I think the summation is very good at determining tops. If we have a second, I'll do it real quick. But see how you're turning right here in that corner? Okay, that's the first sign that I'm looking at. And we want to be cognizant of this. Now, for those that don't know, I'll pull down a definition very quickly here. If you ever don't know a definition, go to Investopedia. They have the most generic definitions out there. They do a good job. I have zero affiliation with them. They just do a good job. You got to deal with a bunch of ads, but they tell you what it is. The McClellan Oscillator market breadth indicators based on the difference between the number of advancing and declining issues on the exchange, such as the New York Stock Exchange or NASDAQ. The indicator is used to show strong shifts in sentiment in the indexes, called breadth thrust, but also helps in analyzing the strength of an index trend or divergence. So I'm not really interested in the trend or divergence, right? To me, this was a negative divergence. I mean, you can see that all day long. I'm sure you guys can already see it. So when people say, well, why don't you use it for that? And I do appreciate your comments, but you see that high right there and then lower high, lower high. Well, how'd that work out for me if I use this, right? Okay, so now I made a low, right? Lower low, right? Lower low. Okay, well, we could say that one works, right? But you see you made a what here? And then you made another one here and another one here. So you could say that this worked because of this, but I could show you on RSI how that worked way better. So for me, I'm using it to determine, is the current sell-off bottoming? That's what I use this for. If I'm going to use something else, like McClellan summation, I might as well do it really quickly here. But if I'm going to use McClellan summation, I'll use that to determine that for tops. So here, let me show you that really quickly here. I think I have that in here, New York Stock Exchange. So what I'm doing with that, I'll pull this down. This is really good in my opinion of like being very like, hey, this is what's going on. You definitely want to pay attention to this. I think they do an excellent job. Let's blow this way up so we can see this. Let's get this one here too. Boom, boom, boom. So what this is telling me here, and you'll start to see these peaks, see when the cross happens. If you mark the cross, okay, it'll tell you like almost exacting when these peaks are on the New York Stock Exchange. And it does an excellent job. People could say, well, you can mark this from the bottoms here. You can. But I find looking at that histogram gets me in sooner because you're going to get false positives. You get less false positives with the histogram for whatever reason. We can talk about it at another date if you want to, but comment below. And then you look at this and go, well, duh, right? I mean, obviously that doesn't look good. And this is what we're dealing with right now. So there are two things that I use. I hope you found that helpful. For me, there's a lot of opportunity out there right now to make money. You're taking a look at like Bitcoin. You're holding in here. Is this the new level? I don't know, but I will tell you that these names are still overvalued. I was able to short this again today, short stock and buy puts. I did quite well with it. I think the guys in the room, guys in the general sense, did very well with it too. But we shorted we bought the 1200s, made like 50%. And if they held them overnight, they held them overnight. If not, they didn't. But to me, you're really having issues here. You're starting to see this absolutely roll. I short a lot of like ETFs because they're super easy and less volatile, and this one makes a ton of sense. I've been short this for a few days now. I'm doing just fine with it. There's no need for me to do anything. It rallies up, I'm getting out of the way. The other thing I would say to you is, and I'm not going to do it tonight for time's sake, but I'll do it on Saturday if you want me to, you need to start looking at interest rate sensitive ideas that were going up because they were going to cut rates. Those ideas are going to have a heck of a time here. What we want to be looking around is for turnaround situations on real companies that are trading at low beta for earnings for longs. But anything on the interest rate side, you want to be careful of. Now, Netflix, I'm going to clean all this off for a second. And let's just drop this down right here. I really think it's very important, guys, for you guys to be drawing support and resistance lines and focused on that in this kind of environment. It's extremely telling, especially during the day. I mean, go look at NVIDIA and where it held today. I mean, it's really clear. If I have time, I'll do it. But again, here's your 1 minute bar. This was really misunderstood and they started to rally. We were actually able to short this super fast and take advantage of this because we understood the fundamental analysis. The very first thing that we do, and you'll see it here if you can blow this up, the very first thing you do is we just look at our research, all the research we have access to, and then you go through it. Like this should be, I think this is JP Morgan and Goldman's cheat sheet. And so really what they're doing is just telling you exactly what the street's looking for and what the expectations are. Then you can take advantage of it, right? So when that news hits, you're already prepped. You already know where everybody is. And this is just earningswhisper.com, easy to grab. So when those numbers hit, we know what they are. You always want to look at the time. Always look at the time that they're supposed to release because they can release immediately when they give that time. That's why you see some come out at 4, some come out at 4:10. They tell you exactly. So once you're prepped and you know, then you can go from there. And that's really where you're going to do, in my opinion, where you can do exceptionally well. So if you take a look here, we knew what the subscriber growth was. We knew what they were attempting to do. And so we could move fast. So when I'm looking at it, you see this is 401, the subs looked off, meaning subscriptions looked off. So we had all the data before, we knew exactly what to look for. And then subs will be lower. As soon as they said quarter over quarter, subs were off. And then they said quarter over quarter is going to be lower. And by the way, we're not going to report subs anymore. You know, by the time they said that, that was it. So you have the doji and you have the false break that there's less than 50% up. It undercuts. Into this bar, I actually sold, and then I got the confirm here. And what I'm doing is I'm using the top of this bar as a way to get out at the beginning. And then when it starts to drop, I'm actually getting more short. And then by that time, you can see it here. And then I just start moving the stop. And then as it just plummets, I'm scaling out just in case something else comes out. You never know, right? And then what you're doing is you're marking the bottom of that bar. And so I mark the bottom of that bar, and then as it goes up, I'm getting out of the way, okay? By doing that, you have the entire thing set out. And then what you're doing from there is you want to see how close you're going to be to being right or not. And then you can just see the rest of it here. I'm out. Thank you very much. Probably goes lower, but not worth the risk. So now I'll just watch the call. I'm making this at the time of the call. I've seen no action in recording this. What I would leave you with is a lot of people, when they watch these videos or watch other videos out there, you need to start looking at fundamental analysis and macro. If you do, the technicals will just fall into place. It'll make your life so much easier. And we'll get more into it this Saturday. That's it.